And for more insight on the chip sector, we're joined by Rolf Bulk. He is equity research analyst at Street Research. Rolf, good of you to join us. Now, on the back of TSMC's earnings and the conference call, what's your outlook on the stock? As it scales back investments, its inventory adjustment seems to be taking longer than expected.
Yes, thanks for having me, Roland. Indeed, inventory adjustment is taking longer than expected. And what we see now is that TSMC for the current year, for 2023, is expecting revenues to decline, whereas previously they were still counting on at least some revenue growth. Now, importantly, when you take into account the quarter that they just reported, their guidance for the second quarter of the year and the guide for full year 2023, you do see that implies a very strong recovery in the second half of the year. So while that inventory correction is taking a bit longer to play out than initially expected, the upside as we move out of the correction is still definitely there. So we retain a positive perspective on the stock on that basis.
So you're saying recovery in the second half, but how bad is that chip glut currently, and how much worse is it likely to get?
It is absolutely a deep cycle. We see that soft macro is resulting in a weakness in smartphones and PCs. Those markets are not recovering as fast as expected. And while there is some incremental demand related to AI applications, the ChatGPT that has been a big focus of the market for the past few months, that is not enough to offset the weakness in those large mature markets for the time being.
Will it be a weak picture for the entire chip market? I mean, are some worse off than others, like, for example, those used in cars and consumer electronics, for example?
Yes, we do see that in particular consumer applications, I mentioned smartphones and PCs, that those markets have started to correct already, whereas automotive and industrial are actually still fairly strong. What TSMC did mention on the call that they hosted just now is that they expect automotive semiconductor demand to also become softer in the second half of the year. So that market is not immune to the recession.
And this whole drive towards AI, 5G, and the popularity of ChatGPT, is that supporting demand for certain chip makers more than others?
Yes, it is. In particular, it is a big growth driver for NVIDIA. A lot of these AI models that you hear about, they run on GPUs, on graphic chips. And NVIDIA is a clear market leader in that segment of the market. So in our estimates, we expect NVIDIA to grow between 20 to 30% per year over the next 5 years. And most of that growth is driven by data center applications, i.e. AI. Now, other beneficiaries are TSMC. TSMC manufacture all of these GPUs for NVIDIA. NVIDIA has outsourced all of that to TSMC. And NVIDIA accounts in our estimates for around 8% of TSMC's business. So they are not nearly as large as Apple, who's around a quarter of TSMC's business, but still they are very large customers. So indirectly, TSMC is a beneficiary as well of this trend.
So TSMC benefiting from NVIDIA's gains. But when it comes to investing in AI, we should also be differentiating the chip makers from the enterprise software companies and the tech giants that actually utilize these AI tools. Which are your top picks in those sectors?
Well, absolutely. There's a hot debate going on right now whether, for instance, Microsoft or Google will be the main beneficiary of this trend. The way that we prefer to think about this is that regardless of who eventually wins in this space, all of those companies will need to utilize chips manufactured by TSMC and NVIDIA. So, if you will, it is not necessary to take a view on who is going to win, as long as you invest in the chip makers that are going to deliver those chips to the Googles and the Microsofts of the world.
Rolf, thank you very much for your time and for your analysis. That was Rolf Bulk, an analyst at Street Research.